One of the biggest misconceptions about Bitcoin is that it's for people that are super into tech and spend all their time reading about it. But by the end of this video, you'll be able to know what Bitcoin is, how it works, and why it still may have room to grow even after this bull run. Let's get into it. We'll start off by sharing 3 reasons why I think you should invest in Bitcoin, and then also 3 reasons why you shouldn't. Now, one of the 3 reasons why you should invest in Bitcoin can be broken down very, very simply, and it is that Bitcoin is decentralized. This is a jargon term that keeps coming up, and you might wonder, what does it mean, Sim? And also, what are we decentralizing from? Essentially, the best way to understand this is to think about why Bitcoin was invented in the first place. Bitcoin and all cryptocurrency was invented to move away from regulated government institutions, because if you have something like the US dollar or the Australian dollar, these are regulated by the governments and the reserve banks of these countries. In New Zealand, we call them the Reserve Bank. In America, this is the Fed. And they control things like inflation by, for example, printing more money. Printing more money means that there is more money going around and the value of the dollar drops. This isn't so great. And so one of the reasons why Bitcoin and cryptocurrency was created was to say, hey, what if we have a way to send money or own money, but no government can suddenly go evil, no bank can suddenly stop us, we're also not paying conversion rate fees, and if someone wants to transfer money overseas, it is a lot easier and not kind of constricted by the rules and regulations of laws. And also it provides a level of security, and you can be anonymous when you send it. People won't know that the money that you're sending comes from your account, which makes it a little bit easier for people that want to send things without others knowing about it. The second reason why you may invest in Bitcoin is it acts like a hedge against inflation, a lot like gold. The reason why people have gold in their overall investing portfolio is when shares are down and everything's panicked and people are worried, oftentimes gold does really well. A recent example of this was during the tariff drama that was happening around the world and stocks were tanking. Gold actually ended up reaching an all-time high and is still climbing. The reason why people thought, well, maybe Bitcoin could do something very similar is because there's only so much Bitcoin available in the world. It's like saying, hey, we only have 10,000 Birkin bags, and therefore if lots of people want it, there's not as many options available, then the price of it goes up in value. Birkin bags, Bitcoin, very similar in that idea that if there is scarcity, there hopefully is enough demand to keep prices going up and up and up. However, there is a little bit of a caveat here in which that Bitcoin has not consistently correlated with movements around the share market, especially the S&P 500. Unlike gold, that has a very strong relationship with what we see in shares, we haven't seen this be completely mirrored by Bitcoin. And so its usefulness as something to hedge against inflation cannot be guaranteed. Now, the third and probably the most important reason, and I would say the reason why we are seeing such a huge surge in Bitcoin over the last couple of months, is Bitcoin is now more widely accepted and regulated. We love shares, stocks, and any asset class that are regulated because it adds more legitimacy to it. And also it means that institutional investors, so large funds that hold millions, if not billions of dollars, start going, hey, this is something that we can now put into our portfolio for other investors, which increases demand because there are more buyers that want to put money into it, and therefore causes the smaller supply to go up in value. For example, the Securities and Exchange Commission, the SEC, which for the non-Americans, the best way to describe it, they're kind of like the police of all things related to investings and stocks and trading. They now regulate Bitcoin and Ethereum ETFs. So that's one of the ways that they're saying, hey, look, if you want to invest in this, it's not necessarily the most craziest thing, and now we actually have guards and rules and some level of protection surrounding them. Also, something that had the effect of like adding gasoline to a fire was when the American Trump administration in 2024 said, hey, look, we're going to allow cryptocurrency to be a part of the US. We are going to encourage and create laws to regulate it, and we're actually pro-cryptocurrency. This caused such a huge surge in Bitcoin's prices, and that has been one of the main drivers of why it has been reaching all-time highs consistently over the last couple of months. And you might be thinking, okay, Sim, there's a few benefits of crypto. It is more regulated. I'm glad to hear. It is decentralized. It acts like a hedge against inflation. But I'm sure there are some downsides. There's obviously a reason that not everyone is getting rich off Bitcoin. And what do I need to know before I make a decision? And how do I know if this is the right choice for me? And essentially, there's a couple of reasons that you need to worry about Bitcoin, because there is no perfect investment. And this is definitely far from it. And the first is probably that because it is decentralized, there are no circuit breakers. Now, after some very large crashes that happened in Wall Street with stocks and shares, we saw that circuit breakers were introduced. Circuit breakers, think of them kind of like automatic blocks or breakers in a circuit that cause stocks to stop trading. Essentially what it means is if you have shares that are plummeting and things are getting a little bit out of control, there are laws and rules where we can stop shares from trading and stop the madness and allow people to kind of take a breather. It's like a referee being like, time out. This is a little bit out of control. Let's just halt this. Everyone take a breather. Everyone go away, touch some grass, take a moment, and we'll come back. We don't have that available when it comes to Bitcoin or any cryptocurrency because there is no owner of it. And so we cannot say, hey, look, we can't call them up and be like, can you please put a pause on this? This is not working. The other issue is that crypto markets also trade 24/7, unlike the share market. At least with the share market, I get my weekends. At least with the share market, it closes like a physical shop at 4 p.m. and opens up at 8 or 9. And it allows us to have just a break. Cryptocurrency, on the other hand, is 24/7. So if you're investing and watching your Bitcoin investments, you are on 24/7 if you are trying to see how the movement is going. And that can create a lot of anxiety. And it's probably outside of most people's risk tolerance to be able to even check what's going on in their portfolio at all times of the day. You don't want to be waking up in the middle of the night and going, oh my God, it's dipped very quickly. Let me quickly pull out my crypto coins. The second concern that keeps coming up is that there is no support and the transactionals are irreversible. Like I said, because it is decentralized, you can't call up your crypto brokerage and go, oh my God, I'm really sorry. I accidentally sent my Bitcoin to the wrong person or to the wrong wallet. And very, very commonly do people lose their crypto wallets. Unlike when you own stocks and shares that are kept in a brokerage, you have the password for your brokerage, and that's where your shares are kept, often in your name or the name of the brokerage themselves as a custodian. We don't see this with crypto. And so what ends up happening, especially with people that invest small amounts of money and it's kind of something that you do once and forget about, you get a crypto wallet, which is either an online wallet or you can get a hard drive wallet. And every wallet has a very long specific code password that you cannot change. And it's usually numbers and letters like A7Z543, but it's this long. And you have to write that down somewhere. If you forget the wallet code, you therefore do not get access to your cryptocurrency or Bitcoin ever again, and that money is lost forever. And there have unfortunately been many, many people that have lost $5,000, $10,000 to millions of dollars worth of Bitcoin or any cryptocurrency for that matter because they've forgotten their passcode. I can't even remember my passcode for half of my accounts. And so this personally has been quite a downside for me. And the third and final reason, and probably the one that gets to me the most, the one that I worry about, is that cryptocurrency has no intrinsic value. Unlike a stock of a company, let's say Apple has a CEO, it has a board, it has products, it has sales revenue and profit targets, and we can see the intrinsic value of a stock of Apple because there is something behind it. There is some reasoning of something being sold that either sells for more or for less. Cryptocurrency, Bitcoin, there is no intrinsic value. There is nothing that says, hey, at minimum, 1 Bitcoin is worth $1. And therefore, very quickly, just like Bitcoin's price can rise, it can absolutely go to zero, and there's nothing stopping it. It doesn't issue dividends, it doesn't have a CEO, it doesn't have a board that can make decisions based on it because it is decentralized. And so there's no one that can hold the price accountable and no one that's incentivized to keep the price up except for the people that own it. And for every Bitcoin billionaire or millionaire that exists, there's many, many, many people that have lost a lot of their money. For example, if you bought Bitcoin in 2013, that sounds amazing. That would have been great. But you would have lost 80% of your value. If you put $100 into Bitcoin, you would have lost $80 for 3 whole years. And if you were strong enough to not sell, which I don't think a lot of people would have, only then after 3 years would you have broken even. And then, yes, it would have continued to rise, but that is a very long time. And therefore, you really have to appreciate that Bitcoin and cryptocurrency in general has a very high risk, high reward relationship compared to everyday stocks and shares. So you might be thinking to yourself, okay, Simran, I understand there are some pros, there are some cons. I appreciate that maybe in some ways I could really grow and have Bitcoin and, there's absolutely still room for it to grow. It's not completely at its all-time high, but there's also reasons that might hold me back. For example, it being decentralized and the fact that there genuinely is no intrinsic value. But how much of my portfolio should I have in cryptocurrency? And also, is it something I should even touch at all? And I guess at the end of the day, it comes down to your personal values, but most experts recommend not having more than 5% of your overall portfolio in any cryptocurrency, even including Bitcoin. And yes, while the regulatory risk might have eased, the market risk is very real. And as we know, regulatory environments can change as well. So at the end of the day, Bitcoin can absolutely have a place in your portfolio, but keep it a very small percent and make sure it aligns with your personal risk profile. If you want to keep learning more, please, the best thing that you can do is take a screenshot, put this on your Instagram story, tag friends that invest, because it is the best way for us to reach more people, make financial literacy as accessible as possible. And what's better than living in a world where more of us have access to that kind of information? So with that, I'll see you next week.